Today, we are diving into the latest on SoFi. We'll be examining some key data points, the impact of short sellers, and all the crucial details you need to know.
Hello, everyone.
Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell, so you never miss any of our uploads and also enter our giveaway. But before that, alert, this is not a financial advice video. Starting off, SoFi experienced a slight dip of 0.74%. It was a highly volatile day with a pre-market high of $6.86 and a low of $6.71, even touching $6.70. Early in the day, short positions increased, driven by news surrounding regional banks. It's estimated that around 63 regional banks are nearing insolvency, which impacted SoFi negatively. However, once the market opened, SoFi saw a significant spike due to short sellers covering their positions and some institutional buying. There were no new updates or SEC filings from SoFi today, making it a relatively quiet day. Despite this, shorts increased by about 3 million shares at the market's opening, with around 2 million shares being returned shortly after. One notable transaction involved 145 million shares. This flurry of activity raises questions. It's puzzling why institutions would increase their positions today, especially when most of the market was red, yet SoFi remained green. This unusual movement could be due to circulating rumors, though nothing concrete has emerged. On the short-selling front, there was an increase of 284,000 shares today. While this seems significant, it pales in comparison to the 182.05 million shares being shorted overall, representing 17.53% of SoFi's free float. The average cost to borrow stands at 102, with a utilization rate of 75.16. Short sellers remain deeply embedded in SoFi's market activity, heavily influencing its movements. The dark pool, primarily used for shorting, saw substantial transactions today, highlighting ongoing manipulation. Looking at the broader economic picture, there's speculation about a potential rate cut at the September 18th meeting. The probability of a 25 basis point cut has risen from 30% to 56.7%, with a 99% chance of a 50 basis point cut. A rate cut could have significant implications for the broader market and SoFi. Turning to the options market, SoFi saw substantial activity with $3 million in call options and $102 million in put options. The sentiment was 46% bullish, despite the short-selling pressure. Short sellers likely use options to hedge their bets, contributing to the complex dynamics affecting SoFi. Examining open interest, there are significant positions at the $7, $7.50, and $8 strike prices, indicating potential resistance around these levels. The $7 mark is particularly challenging for SoFi. Technically, SoFi appears to be trending towards the downside. For instance, there's a small wall at the $6.50 strike price, which could act as a barrier if negative data points, like non-farm employment figures, emerge. Given these conditions, it's crucial to monitor SoFi's movement around key support and resistance levels. For those trading options, adjusting strategies based on these technical indicators is essential. One strategy to consider is selling puts on stocks you like, such as SoFi. This approach can either get you shares at a desired price or allow you to keep the premium if the stock price increases, making it a win-win scenario. SoFi closed at $6.72, trading between the S2 and S1 support levels. The $6.65 level is a critical support, historically holding during significant sell-offs. If SoFi can maintain above $6.70, it might test the next resistance at $6.88. However, depending on upcoming economic data, these levels will be crucial to watch. On the technical front, SoFi is trading at the lower end of its Bollinger Bands and showing oversold conditions on the stochastic indicator. There's also a bearish deviation, with the red line above the white line signaling potential downside. Interestingly, retail investors have been selling off significantly since late March, despite SoFi's predominantly retail ownership. The sell-off among retail investors is intriguing, especially given SoFi's retail-heavy ownership. Typically, you'd expect retail investors to buy the dip, but it seems they're discouraged by SoFi's struggle to break past the $7 mark. This trend has been ongoing since late May, suggesting a deeper underlying issue. In conclusion, SoFi is currently navigating a complex landscape with significant short interest, institutional activity, and technical challenges. While there's potential for upside, particularly with a possible rate cut on the horizon, the stock faces substantial resistance and ongoing manipulation. For those invested in SoFi, staying informed and adjusting strategies based on market conditions is crucial. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.